Subscribe to my channel Report Stock.
Welcome to the Deep Dive. Today we're taking a closer look at Gilead Sciences, that's ticker GILD specifically, their recent Q2 earnings report. Our mission really is to get past the headlines. We want to unpack what these numbers actually mean and maybe explore the future outlook a bit for this, pretty significant player in the biotech world. We want to get you quickly up to speed on what's driving things at Gilead.
Absolutely. And these earnings reports, they're not just dry numbers on a page, are they? Think of them more like a snapshot, maybe an X-ray of a company's financial health. Super critical for investors or really anyone watching the market. Now, our sources for today's deep dive are excerpts from a detailed analysis of Gilead's latest figures. And as we dig in, maybe think about this. What's the key thing you want to get out of understanding how a company's performing financially?
Okay, so let's jump right into those initial headlines.
Yeah.
Because they were pretty eye-catching. Gilead Sciences came out with quarterly earnings of $2.01 per share. That number, the EPS earnings per share, it actually beat the Zacks consensus estimate. That was $1.95 per share. So, that's an earnings surprise of just over 3%. What's interesting is that this actually matches their earnings per share from a year ago, $2.01 and $2.
Yeah, and for a company like Gilead, that size, that maturity, a 3% earnings beat, that's not insignificant. It often points towards, strong operations, maybe key drugs like Biktarvy doing better than expected, or maybe they're just managing costs really well. It's definitely a sign they're executing well compared to what analysts thought.
And it wasn't just the earnings side. The revenue picture looked good, too. Gilead posted revenues of $7.08 billion for the quarter. Again, they topped the consensus estimate. That was sitting at $6.95 billion. So they beat that by, about 1.95%. It's also up from the $6.95 billion they did a year ago. And this isn't just a one-off lucky quarter, right? This company, they've actually surpassed analyst EPS estimates 3 times.
Yeah.
And revenue estimates 3 times, just over the last 4 quarters. That's a pretty consistent pattern of beating expectations.
It is, yeah. Those are undeniably solid numbers. But what's interesting, though, is while good results often give the stock a quick pop, the sustainability of that move, how the stock performs longer term after the report, that often really depends on what management says. Their commentary during the earnings call. Did they flag any new headwinds or maybe some unexpected good news? That narrative can shape how investors feel just as much as the raw data. But yeah, that consistent track record you mentioned, that definitely helps build confidence.
That's a really good point, the story behind the numbers. Okay, so just to quickly recap the Q2 highlights. Gilead's earnings and revenue both came in comfortably ahead of expectations, and they've been doing this pretty consistently over the past year. Now, for the real-world impact, and this is where it gets interesting for you watching the market, Gilead shares, GILD, they've climbed about 19.4% just since the beginning of the year. It's a significant jump, especially when you put it next to the S&P 500. The S&P's gain was 7.9% in that same time frame. That kind of outperformance definitely turns heads.
Right. So the immediate question becomes, okay, great quarter, but what's next? What does this mean looking forward? And one of the more reliable tools we have for predicting near-term stock moves isn't just looking backwards at performance. It's looking at the company's earnings outlook and, crucially, how analysts are revising those estimates. There's quite a bit of empirical research showing a strong link there. And interestingly, just before this latest earnings report came out, the trend for Gilead's estimate revisions was actually, it was mixed.
Mixed? Okay, hang on. If they just posted this strong beat, why would the revisions be mixed? Can you unpack that a bit? And what does that then mean for something like their Zacks rank?
Yeah, great question. So mixed basically means that even with the good Q2 results, you might have had some analysts bumping up their future forecasts, but maybe others kept theirs flat or even nudged them down a tiny bit. Perhaps they're looking at other factors like pipeline news or, what competitors are doing. So this balance, this mix of upward and downward nudges, it nets out to Gilead currently having a Zacks rank #3, and that translates to a hold recommendation. Now, this isn't just someone's opinion. It's a quantitative system driven mostly by these earnings estimate revisions, how the whole analyst community is tweaking their expectations for future profits. So even with a good Q2, the market's forward look reflected in these revisions suggests analysts expect things to be pretty stable rather than, say, a big surge continuing right away. And if we look ahead at the actual numbers, the current consensus estimate for Gilead for Q3, it projects earnings per share at $2.16. That's on revenues of about $7.45 billion. For the whole current fiscal year, the consensus is looking for around $8.02 in EPS on revenues of $28.68 billion. It'll be really interesting to see how the specific numbers might shift now that the Q2 results are actually out there.
Okay, that's a lot of focus on Gilead itself. But companies don't exist in a vacuum.
right? How much does the broader industry picture factor into a stock's performance?
Oh, massively. It's absolutely vital to zoom out and look at the industry context. The health of the whole sector can really lift or drag down an individual stock, sometimes almost regardless of its own results. Now, the industry Gilead is in the Zacks biomedical and genetics industry. It's actually doing pretty well right now. It's currently ranked in the top 41% out of over 250 Zacks industries. And our research consistently shows that the industries in the top 50% tend to outperform those in the bottom 50% by more than 2 to 1. So that's a positive backdrop for Gilead. Just to give you a quick comparison within that same space, there's another company, Agenus ticker AGEN. They're in the same industry group. They're expected to report their Q2 results soon, I think around August 11th. Now, they're projected to post a quarterly loss, about 0.78 cents per share. And this is key, that loss is actually a huge improvement, almost 70% better than their loss a year ago. And their revenues are expected to be up slightly, around $25 million, up 6.5% year over year. So it just shows even within a strong industry, you have different stories. Gilead's showing strong profits, while others like Agenus might be showing, significant progress from a different starting point.
That's interesting context. So when you pull all of this together, what does it really mean for you? Trying to get a handle on a company. Yes, Gilead's Q2 headline numbers look good, definitely positive. But what extra insight do you gain when you also factor in those maybe subtle, sometimes mixed signals from the analyst estimate revisions? How do you weigh the tailwind from a strong industry sector? Or the predictive hints from tools like the Zacks rank? It makes you wonder, doesn't it? What other maybe overlooked indicators could tell you more about where a company's really headed than just one single earnings report? Something to think about, really. How these deeper layers of insight can shape your understanding of, well, any company you're curious about, giving you a much more complete picture.
Subscribe to my channel Report Stock.